If your tax refund mysteriously shrank by hundreds, even over $1,000, and your pay and deductions hadn't changed at all, this is for you. You didn't do anything wrong. A tax break you never knew was temporary was quietly switched off, and almost nobody explained it. This hit more than 10 million Australians. Up to $1,080 per person per year simply disappeared from refunds, according to ATO guidance on the low and middle income tax offset. By the end of this video, you'll know 3 moves to take back control. Check your offsets, value your deductions, and reality check your withholding. Here's the number at the heart of it: $1,080. That's the maximum low and middle income tax offset. Paid to over 10 million Australians, then removed entirely from the 1st of July 2022, according to ATO guidance. But here's the part nobody tells you. Most people assumed it was built in permanently and only found out when their refund collapsed. 3 moves to fix this: check which offsets you actually got, value your real deductions against the new automatic one, then run a quick withholding reality check. Each takes under 20 minutes and every tool is free. Let's understand the mechanism because it matters. A tax offset or rebate reduces your tax dollar for dollar after your tax is calculated. But most are non-refundable, meaning they can only cut your tax to zero, never hand you cash on their own, according to ATO guidance. The LMITO was exactly this kind of offset, worth up to $1,080, applied automatically when you lodged. Then from 2022-23 onward, it ceased entirely. No phase out, just zero. In the old LMITO era, a low to middle income worker could get up to $1,080 plus up to $700 of LMITO, a total of $1,780. PwC tax summaries and ATO guidance. Now only LMITO remains, so the maximum relief is $1,080 lower every single year. The second layer is confusion between a deduction and an offset, and it's about to get worse. From 2026-27, the government introduces an automatic $1,000 instant deduction for work expenses, no receipts needed, according to the 2024-25 budget, but a deduction only reduces your taxable income, so its value depends on your marginal rate. Here's the trap. At a 32.5% marginal rate, that $1,000 deduction saves you about $325 in tax, not $1,000 back, according to the budget explainer. Someone who genuinely spends $3,000 on work expenses could save about $975 by claiming the lot. It's just roughly $650 more every year than just defaulting to the standard. The myth: the government took away my refund. I used to get an extra $1,000 and now I don't. The fact: from ATO guidance, the LMITO was never a permanent cash bonus. It was a temporary, non-refundable offset that expired after 2021-22. Once it was gone, your real tax bill was simply revealed. Put it together and it stings. $1,080 of lost LMITO every year. ATO guidance. Plus around $650 lost annually if you default to the standard deduction instead of claiming $3,000 of real expenses. Budget 2024-25. Combined, many average workers are paying over $1,700 more tax each year than they think they should. Meet Sarah. She's 37, a registered nurse in a Sydney public hospital, earning $78,000 a year with about $110,000 in super. She historically claimed $2,500 to $3,000 in work expenses: registration, training, shoes, laundry. Here's what she found when she actually checked. Discovery 1. Around $3,000 gone. In 2021-22, Sarah received roughly the full $1,080 LMITO ATO guidance. In the 2 years that followed, there was no LMITO at all, and her refund was about $1,000 lower each year despite a similar income and similar deductions, leaving her down roughly $3,000 against what she'd anchored as normal. Discovery 2. $0 of LMITO. The low income tax offset is up to $700 below $37,501, but it tapers and disappears completely once taxable income passes $66,667, according to PwC tax summaries. At $78,000, Sarah's LITO is nothing. A full $700 offset lost purely because of where her pay now sits. Discovery 3 for Kraim. The new deduction is not the gift she imagined. From 2026-27, she gets that automatic $1,000 deduction, worth about $325 at her rate, with an average saving of just $205, budget 2024-25. If she stops tracking and leaves $1,500 of real expenses unclaimed, that's about $488 in extra tax every year. Add it all up over a 20-year mid-career stretch, and Sarah's direct cost is around $24,000, about $10,800 in lost LMITO, $9,760 in missed deductions, and $3,500 from the LITO taper. Invested at a modest 5%, that money could have grown toward $30,000 to $40,000, though that growth figure is a modelled projection, not an official number. Could this be you? 3 signs. Your refund shrank after 2022 even though your pay didn't change. You don't actually know which offsets appear on your notice of assessment. And you haven't tracked your work expenses because you assume the $1,000 deduction covers it. If any of these ring true, the next 3 moves are for you. 3 moves. Let's do them. Everything here is free and lives inside MyGov and the ATO app. No agent required to get started. Move 1. Check which offsets you actually got. Log into MyGov, open the ATO service, and download your past notices of assessment. You'll see line by line which offsets you received. LMITO present in 2021-22, gone after. And whether LITO applies at your income band. This is general information, not personal tax advice. Here's how. Log into MyGov and select the ATO. Go to Tax, then Lodgements, then Income Tax, then History, and open the last 3 to 5 years. Note the amount for each offset and compare year by year. You've done it right when you can clearly see that LMITO is now 0 and understand why your refund changed. Or Move 2. Value your deductions against the automatic $1,000. Add up your actual work-related expenses and compare them to that standard deduction. If you spend $2,000 or more a year on registrations, uniforms or home office, simply defaulting to the minimum quietly costs you real money at tax time. Here's how. Use the ATO app's My Deductions tool to log expenses through the year. Union fees, registrations, uniforms, home office. At tax time, export them into My Tax and check your total work-related expenses figure. You've done it right when evidenced expenses above $1,000 are fully claimed, not left on the table. Move 3. Run a tax payable versus withholding reality check. Use the ATO's tax tables and your income statement to estimate your real bill with no LMITO and only LITO if you're under $66,667. The goal is simple. Make sure a surprise bill never blindsides you again. Here's how. In MyGov under the ATO, find your income statement and note your year-to-date gross pay and tax withheld. Use the ATO tax withheld calculator to estimate your yearly tax with no LMITO. You've done it right when your eventual refund or bill lands within a few $100s of your prediction. Why does this matter right now? In 2018-19, the LMITO was introduced as a temporary offset of up to $1,080 ATO guidance. 2021-22 was its final year. After the 30th of June 2022, it was removed, dropping refunds for millions. And from 2026-27, the new $1,000 instant deduction begins with a permanent $250 working Australians tax offset from 2027-28. Each change is silent and automatic, which is exactly why people only notice when the money's already gone. After you act, here's how to know it worked. You should see no LMITO line on any 2022-23 or later notice of assessment. Confirm that your LITO matches your current taxable income band And if your estimate and your final result land within a few $100s, you're properly in control of your tax time. Everything here is drawn from the ATO, the 2024-25 Budget Tax Explainers, and PwC's Australian tax summaries. All the links are in the description below so you can check the thresholds yourself. So now you know why your refund shrank, how LMITO tapers away, and what the new $1,000 deduction is really worth. Next week, we're digging into the super fees quietly draining your retirement balance. If this saved you from a nasty surprise at tax time, subscribe. We read the fine print so you don't have to, and there's a new one every week.